Welcome. This video will explain the three most common corporate clean energy goals. The first goal is 100% renewable energy. In this scenario, a company aims to match its annual power consumption with clean energy. For instance, if Company A uses 100,000 megawatt hours of electricity between January 1st and December 31st, it will purchase 100,000 megawatt hours of clean energy in that same period. 100% RE involves matching annual energy consumption with an equal amount of renewable energy. Clean energy purchases are not restricted to the grid in which the consumption occurs. That means a company can purchase renewable energy wherever it's least cost, without considering where it operates. For example, Company A, whose operations are in Louisiana, could buy renewable energy from projects in any grid. The second goal is carbon matching, also known as emissions matching or emissionality. The goal is to match a company's annual emissions associated with its energy consumption with an equal amount of avoided emissions from its purchases of clean energy. So if Company A emits 40,000 tons of carbon in a year, it will procure clean energy that avoids 40,000 tons of carbon emissions over the same period. Like 100% RE, carbon matching involves annual matching, but focuses on carbon emissions rather than megawatt hours of energy. There is no location requirement, but location matters, as each grid has a different carbon intensity. This approach prioritizes clean energy purchases that are least cost from an emissions impact perspective. For instance, a company pursuing carbon matching would rather buy solar power in Kentucky than in California, because Kentucky's mostly fossil fuel grid has a higher carbon emissions intensity than California's, which has lots of clean energy and thus relatively lower emissions intensity levels. The third goal is 24/7 carbon-free energy, or CFE. Unlike the two previous goals, this one involves hourly matching and includes a location requirement. 24/7 CFE aims to match every megawatt hour of a company's electricity consumption every hour of every day with carbon-free electricity sources in the same grid. It is the end state of a fully decarbonized electricity system. If a company matches 100% of its hourly consumption with CFE, the company would have a CFE score of 100%. If the company only matches 80% of its hourly consumption with CFE, its CFE score would be 80%. Companies may pursue one of these goals, combine goals, or add constraints to future-proof their emissions impact or minimize financial risk. For instance, a company may target 100% RE, but also add location constraints. That means it wants to match its annual electricity use with clean energy, but prefers to source it from projects located in the same grid as its operations. In this case, a company with 100,000 megawatt hours of annual load in Texas would procure 100,000 megawatt hours each year from clean energy projects also located in Texas. It can be very difficult to choose the right goal for your business without understanding the trade-offs. Versus Aria platform helps companies understand the benefits and drawbacks of different goals. Using generative AI and predictive modeling, Aria analyzes and illustrates the cost, risk, emissions, and carbon-free energy profile of the various options. This holistic view empowers customers to determine their optimal, data-driven, future-proofed, clean power strategy.